when we started our business, Africa was growing probably 5% less than China per year. Today, the difference between Africa's growth and China's growth is less than 1%. 5-10 years from now, Africa is growing faster than China.
What is so important and so crucial for a faith-driven investor in the continent of Africa?
Africa today provides an opportunity for commercial returns, which the faith-driven investor is interested in, and high level of impact with variety.
Here's to bold visionaries, faithful investors who make God the goal. While some may call them crazy, we see a joyful adventure. God has empowered us to use courageous capital, solving the world's greatest problems under His power for His glory. Welcome to the Faith-Driven Investor Podcast. Opinions expressed in this podcast, including the team and guests, are solely their opinions. Hosts and guests may maintain positions and securities discussed. This podcast is for informational purposes only. It should not be relied upon as specific investment advice for any individual or organization. Thanks for listening.
Welcome back, everyone, to another episode of the Faith-Driven Investor Podcast. New setting today. We are here at Lions Den, the 10th anniversary of the DFW area Lions Den, where we've got a collection of 600 plus faith-driven investors coming together to hear the live pitches of faith-driven entrepreneurs. The theme this year is investing in Africa. And so we've got with us one of the best-in-class institutional grade fund managers of Sango Capital, Richard Okello. What a joy to have you with us. Let's dive in. All right, so Richard, a joy to have you here.
Thank you.
You sat
Happy to be here.
underneath Ray Dalio, one of the legends of investing at Bridgewater for, 10 years. When you show up, firm is at roughly 700 million in assets under management.
Yeah.
You leave, the firm is at over $100 billion.
Yeah.
Talk about that experience, the things you learned.
Well, I'll use a couple words. Wild. It's one word that comes to mind.
Just explosive growth.
But maybe just to bring your listeners into kind of what the setup was. So when I joined, the firm had less than 50 people. When we had meetings, Ray would whistle for the meetings, essentially, to get people's attention. The firm was in a small town called Wilton that actually most people don't even remember that phase. We all brought, today if you go to Bridgewater, employees get fed, they get a lunch brought in. Back then, there was one shop that sold soggy sandwiches across the street. You paid for your own sandwich, okay? So this was very sort of scruffy, let's build this, we're competing against the best, how do we beat these guys and girls and so on. So it's a very exciting time for someone coming out of undergrad.
Absolutely.
But also great learning opportunity. I mean, you had to take, as an analyst investment team, you had to take a class every day with Ray, Bob, or Greg as you worked, right? And you had to pass the class. And the class was on how you invest, and they kind of broke down the world into how you should think about investing. And then you had to take a class on Excel that you also had to pass.
Back in college.
Yeah.
Little did
so
you know.
So it was intense. Worked lots of hours, but it's a really good experience though. Yeah.
That's amazing.
Yeah.
And you came from Africa over to the U.S. on maybe not a controversial, but just a total God thing scholarship story. Talk about the arbitrage of your chicken journey as a 12-year-old, falling in love with Jesus as a 13-year-old, and ultimately how you got to college in the States.
So, I went to boarding school in Uganda. Back when I went to school, the boarding schools were actually the better schools. A lot of these were actually missionary schools started by missionaries. And my first business experience, as you mentioned, was this chicken idea, which was before I went to boarding school. I essentially realized that you could buy chicken in the village and sell it in the city for 100% profit. Okay, you just had to figure out how to get it from one place to the other, right? Without losing it, right? It had to be alive, right?
You gotta have the product.
So that got me hooked on the opportunity you see in some of these economies. Met Jesus when I was 13. That was a real, I think, game changer for me. And then those two things started to intertwine as I went along in life. And so this idea that you can be called or led to something and equipped to do it at each turn is very theoretical unless you've lived that life, which I feel like I have.
Yeah.
So, for example, I went to this boarding school, and the boarding school each year sent one candidate to compete nationally for these 2 scholarships, along with other schools. They were coveted scholarships because it was your first chance to really leave and go to a private boarding school outside of the country.
Absolutely.
Okay. They were given by there's a group of schools called the United World Colleges that are very well known. There's probably 30 around the world right now. But it was tough to get in. Everyone wanted to go. And the year that I went, the scholarship actually should have gone to my best friend who was the top student in the art side. And so what ended up happening is his dad basically said to him, like, if you get this thing, you're not going. Because I want you to be a lawyer. And to be a lawyer, you need to go to school here and to university and do law school here in order to be certified as a lawyer.
Wow.
And so he said to me, you should go for this thing.
What a friend.
Okay. Now, I could have gone for this thing and not gotten it, because then you had the leaders of the other 6 or 7 or 10 schools all competing for these 2 spots, right? And so that was my first real experience of feeling that God was saying, okay, it's time for you to step out of Uganda and go do something else. I went to this high school in Wales, and I met the Dean of Admissions of Swarthmore College, who came to Wales for the first time to do an ancestral search.
How about that?
And decided to come to this school to justify his trip, right? He decided, hey, let me go see if I can recruit,
Yeah.
I ran into him in the hallway. He looks
the
lost.
flight.
We have a conversation. He says to me, you got to apply to Swarthmore. I applied to Swarthmore. I get in, but I don't get enough financial support. I get into other schools with a full ride. He goes hiking. He passes away. I get a call from Swarthmore saying, we're sorry to let you know Dean Grossman passed away. And he had this list of kids he wanted to come to Swarthmore. So we want to try to make it work for them. You got to come to Swarthmore.
Wow.
So that's how I got to Swarthmore.
God's
I get into
fingerprints.
Swarthmore, and I decide to graduate Swarthmore in 3 years. The year that I graduate is the only year Bridgewater recruits 3 years before and 4 years after. Okay? So
Amazing.
need I say more?
Amazing.
The Faith-Driven Investor Conference. Here's to faithful disruptors, the ones who are spreading seeds instead of building storehouses. The ones who solve real problems and take righteous risks. God didn't give you your platform to play it safe. That's why every February, faith-driven investors across 100 countries are gathering in person, online, or at watch parties around the world. 3 hours, battle-tested investors, zero fluff. This isn't just hype, it's a movement. For more information, visit faithdriveninvestorconference.org. That's faithdriveninvestorconference.org. Together, we can solve the world's greatest problems.
So, go to college stateside. I'm getting here into the significance of something I want to dig into. Go to college stateside.
Yeah.
Bridgewater out, the explosive growth. Go to McKenna, which is an extension of Stanford's endowment.
Yeah.
And then talk about the significance of going back home, though, and not the have to, but the get to opportunity that just kind of kept weighing on your heart of, I want to go home and I want to bring what I'm taking back home and make the investment case for Africa.
Okay. So I'll answer the question this way. So when I joined Bridgewater, within 2 weeks, Ray asked us to write down a list of all the things we thought as new people coming in, Bridgewater should do differently or better. And one
love
of
the way Ray
one of the
Dalio
things
thinks.
on that list for me was Bridgewater should trade African markets, because Bridgewater did not. And Bridgewater did trade African markets then. They traded 2 currency markets, but they got so big so fast that the markets were too small for them. Okay. Today, though, Bridgewater's products have got African markets in them.
How cool.
Now, from that point, I was thinking about how I get back to Africa because I had seen the opportunity. The question was, what platform do I take back? Do I go back with a liquid markets platform, Bridgewater private markets platform, some other platform? And that for me was pretty consistent. When I was at Swarthmore, I did probably 150 interviews coming out of Swarthmore. Why? Because I was looking for a platform that would put me back there, increase my chance of going back there. Okay. So for me, the decision to go was definitely not a have to. I mean, in fact, if you looked at my if you think about me as a guy 5 years into Bridgewater as a partner who leaves, right? Always on volition to join a startup.
Yeah.
And who is there? The startup, McKenna, was a $3 to $25 billion business in that 6 years. So like, why would I leave?
You had everything you could ever ask for.
So there was an opportunity though that I saw. And one of the things that actually helped me see that opportunity is I went to Beijing in 2008, Beijing, China. And McKenna sent me to go talk to this young fund manager who was just crushing it and who was deciding who he wanted in his fund. So McKenna says to me, hey, you go talk to this guy, try to get us a slot. If we can get 30 million allocation of 50, he ran a $700 million fund then. So when I got to see the guy, he says to me, why are you in Silicon Valley? I said, well, the office is there. He said, no, you don't understand the question. Why are you there? I.e., why are you not in Africa? So now that guy today, he runs, I'd say probably about 100 billion, not far from where Bridgewater was.
Wow.
Okay. So that guy got me thinking about the question of the opportunity and looking to see how that opportunity had evolved in other markets, looking for signals that are not data-driven signals.
Absolutely.
And that's what precipitated that pathway for me.
And so then Sango started 12, 13 years ago.
Yep.
And the general thesis, I'd love to hear you unpack, but then also just the macro dynamic and environment around Africa right now. We're here at Lions Den in Dallas, Texas. It's the 10-year celebration of Lions Den. The theme this year is all about investing in Africa. And we've heard some staggering stats about population growth in Africa, how many of the fastest growing economies are in Africa, but then also on the other end of those exhilarating stats are the staggering and alarming ones about the percentage of the world's poor that could possibly be in Africa in 2030 and how the aid model has not helped. So kind of unpack some of the Sango thesis and how it dovetails into your macro vision for the continent.
So the Sango thesis is actually pretty simple. The Sango thesis is we want our investors to think of us as one of their top 5 managers globally. So the Sango thesis starts with a theme that is excellence. To be in that bucket, you've got to be excellent at everything you do. Okay, so that's where it starts. And then we say, okay, if you're someone who happens to invest in Africa, what does that look like? And the implications for returns and risk and so on
Absolutely.
and so forth. So then we say, all right, does what's going on in Africa support the returns and risk story of this thesis? And the answer would have to be yes. There's volatility around that. But if you say when we started our business, Africa was growing probably 5% less than China per year.
Wow.
Today, the difference between Africa's growth and China's growth is less than 1%. It's like 0.5. It's flat. So I can tell you, like 10 years from now, Africa is growing faster than China. Because what's driving that is not external, it's internal stuff. It's internal dynamics, internal consumption, internal growth, internal rising levels of education, rising access to energy, technology adoption, all that stuff that is just this cycle that feeds itself, okay? So that supports a thesis around setting oneself up to generate outstanding performance.
Yep.
Okay. If you look at the risks, we talked about that earlier today. Most people's perspective of risk in Africa is 15 years old, in my view, maybe 10 years old.
What would that be? Currency, political instability?
I mean, let's start with political instability. For example, if you ask people how they feel about African risk, they think Africa is a place where coups happen all the time. Lots of countries have coups, elections don't work. And if you go and look at that and say, well, I don't know, last year, Kenya had an election, it was fine. Botswana had an election, replaced the incumbent for 10 or 15 years, no problem. Mauritius had an election. Namibia, you just keep going.
Yeah.
Okay. So the political, outdated. Currency was not outdated. But the currency picture changed as of last year, because as of last year, for the first time, all the major economies in Africa, their currencies are market rate determined. This has never happened in Africa's history.
How about that?
Okay. Trade. Everyone's freaking out about tariffs. Africa doesn't have a tariff problem. Because Africa, how much trade does Africa do with the US?
Pretty minimal.
Okay. Now, there are other risks. It's not like Africa is risk-free.
Yeah.
But the point is, actually, if you think about risk as a relative position, what is Africa's risk? Well, is there more political risk in Africa today than the US? I would ask the question.
It's a fair
Like,
question.
how do you feel? And not just mathematically, like if you just look around and say, like, where's the volatility politically, right? Markets are down with all the tariff activity year to date in the US, in Europe. Markets are up in Africa. Private equity fund managers are not exiting assets in the US. We're returning money
Wow.
at high multiples.
Liquidity is a huge issue here.
So we're returning money to investors. So I'll leave it at that.
We have to mitigate some of the risks. And so then what is Sango going after? When you look at some of the asset classes you're investing across, where are you most encouraged to kind of see particular growth?
So I think we think about that as there's three perspectives on that. One is, where do you see the growth? Two, where do you have scale to invest? There's places where you have growth, there's not really scale. And then three, where do you have enough institutionalization that you can do what you need to do? So if you do that, what falls out of that is private equity, venture capital to a lesser extent, private credit. That's where we're focused. So in those three spaces, private equity, you got 250 general partners. Long history. The history for private equity is about 35 years old. You've had periods of significant outperformance. You've had periods of significant underperformance. And now you have an industry that's maturing and you're starting to really see a pickup. You've got growth, underlying growth that's driving those companies that you see. And those companies need capital. They don't have enough capital. Today, if you're a business owner in Nigeria, you're probably borrowing at 24, 25% in local currency.
24.
If you want to build a factory, you cannot get long-term debt. You're borrowing short-term at that rate. So you have to put up security. You have to provide land or something. Okay, so you've got a real opportunity for private equity to step into a space where you've got growth, growing companies. You need to find good execution, obviously, to generate returns. That's one space that's interesting, and that could be consumer businesses, food businesses, could be energy businesses, all interesting. There is an opportunity around technology. When you have a young population with very rapid tech adoption, you can get a lot of interesting things happen.
Absolutely.
You've seen a lot of value creation in the venture space. Surprisingly, that creation of value has not just been companies that are solving African problems. 3 weeks ago, one of our businesses got acquired by Motorola. So today, if you're unlucky and you call 911, the backbone of that call is our business. We got acquired by Motorola. So you're seeing that shift happen. And so in private equity and venture, I would say as execution tools, that's really interesting. Private credit is smaller, much smaller, but is emerging quickly. And that'll be interesting. Behind that, though, what you really have is you just have a geography that's growing quickly across select set of countries that are uncorrelated to each other. They have different stages of growth. Their growth rates are different. The things driving them are different. And so you can build a portfolio that's not one thing.
Yep.
Right?
And you've got, talk about just the mineral richness of Africa naturally.
So it's huge. I'll tell you what's understated, which is now a focus, is the critical mineral richness. I think when people think mineral richness, they typically think of this traditional gold, platinum, etc. Right?
Yep.
They're not thinking lithium, tantalum, all the other critical minerals that everyone now needs.
Absolutely. We need so many electrons.
And so that space, I think, in Africa is much more endowed than people think. One of our portfolio companies actually has now become the leading marketplace for critical minerals in Africa, that it's supplying into the large global players, Glencore or East-West global players. So that space, I think, is interesting. So what that means, though, is that, I think a time will come when the U.S. starts to think differently about its relationship with Africa as not just a critical minerals, but as a value chain. Because if you're finding companies that are coming into the U.S. and getting acquired by U.S. companies solving global problems, there's a value chain. It's not just the minerals anymore. It's the software. It's the people building software. Absolutely. It's the solutions mindset.
Absolutely.
Yeah.
And then when you think about future of Sango, managing near almost $1 billion assets now, upper hundreds of millions.
600 million. I like where you're going with this.
Well, your compliance department appreciates you greatly for the accountability there.
Yeah.
But future of Sango, vision you have, is it? Am I correct that your capital currently comes from U.S. investors?
Primarily, yes.
So
Institutions,
is there a desire to see the capital come from in-continent or?
100%.
Yeah, so tell me more about that.
So this fourth fund that we're raising will certainly have capital that's in continent. The way to think about the capital in continent that's institutional is that the pension funds in Africa are sitting where the US was in 1985,
Okay.
where you've got boards of trustees, you don't have a lot of staff, you have some consultants, they're investing in public assets, they have an allocation to private equity, they're just starting to learn about private equity. A lot of pension funds in that space. The ones that are front-footed are deploying some capital there already. But if you look across key markets, South Africa, Kenya, Nigeria, etc., you're going to generally see that those pension funds might have maybe 1% in private equity, although their regulatory limits are more like 10%, 10 or 15%.
So they're saying way shy of that.
So that's starting to shift now.
Yeah.
Because a lot of money is coming to those pension funds. Like people are contributing money into the pension funds every month, right? At scale,
Absolutely.
employees, right? And so we do expect that we will have some African institutional capital in our fund, this fund that we're raising now, and you should see that wave. Pick up over time. We also expect European investors in this fund for the first time. We have always had some Asian really large sovereign wealth fund type investors in our funds. What's interesting about Asia is you're seeing countries that never used to be as engaged in Africa, very engaged, the Japanese, the Koreans, very actively looking to deploy capital. So I think that picture is changing quite quickly.
God owns it all, and He cares deeply about the how, where, and why behind our investment strategies. Money is put into our hands to steward wisely for His glory and for the flourishing of the people around us. That's why Faith Driven Investor created our foundation groups, 1 hour a week for 6 weeks, online or in person. Connect with like-minded investors to walk through the faith-driven investing study. Hear real-life stories of battle-tested investors solving some of the world's greatest problems. Discuss what it means to embrace your call to impact the world for God's glory, and get in the game. Don't battle alone. Your calling is too important. Visit faithdriveninvestor.org and join a group today.
Why does a Christ-following, faith-driven investor need to really lock in on this? What is so important and so crucial for a faith-driven investor in the continent of Africa? And what you're doing at Sango, yes, but then more generally, just the investment opportunity at hand.
So I think a faith-driven investor needs to lock in on what they are called to do with the money that they are entrusted with. That's the basic thing they have to lock in on, right? I think the challenge for a lot of faith-driven investors is it is easy to do the easy things. To start with what you know, or start with what you're comfortable with, and a lot of people just sort of stop there. Right?
Yeah.
Like that's all they do.
Set it, forget it.
I think what people will probably find when they get to heaven is they'll probably be told, you only used 1% of what my plan was, and look at all the things that people will be like, oh, this is terrible. They're just going to feel terrible about this. So to answer that question, I think with respect to Africa, Africa today provides an opportunity for commercial returns, which the faith-driven investor is interested in, and high level of impact with variety, which the faith-driven investor is. What's happening, though, is the faith-driven investor today is, in my view, lazy, because we haven't said, okay, I want this and I want that, and where can I get those two things together at scale? And what are my obstacles? Why am I not getting there? Is it because I don't know who's doing it? I don't know how to get in? And once they start to ask those questions, they will find that they should actually already be in there. If the question is like, I don't know how to pick managers, well, then you find fund of funds like ours or others that do that. If the question is, well, I don't know what sectors to put, that's all there. The sectors are there, the variety of sectors are there, the variety of managers are there, the history is there. It's an action issue. They basically have to say to themselves, if I feel called to do A and B from a returns and impact standpoint, today we can tell you this is the market at scale where those two things are married, and they're going to be married for very good reasons. Like all the things you do on this side are driving human flourishing and this and that, the other. They're married. And so why are you not there?
Yeah.
You haven't looked.
It's a good push.
Yeah.
Closes here. What else is God teaching you in your life right now? What's going on in your story? Take us home with some good wisdom.
So I've been spending a lot of time on Psalm 23. And I've been spending time on Psalm 23 and seeing something completely different than I've seen before. A lot of times when you read that Psalm, it starts with, the Lord is my shepherd, I have everything I need. And we quickly go through the pathway, which is you make me rest. And if I get into a dark place, a tough place, you're there, and then you crown me. We get into the middle and the end very quickly. And I've been spending a lot of time at the beginning and asking myself the question, why does God start by providing everything we need? Because he knows we are anxious human beings. And we need to know that we have everything. But even after that's provided, he makes us lie down in green pastures. We're still not where we need to be. So he makes us slow down and lie down. And after that's done, he leads us before. That's still not enough. We're still not there yet, right? So this for me, what's been interesting is this rising awareness of how the starting point of my day, of my week can affect the pathway. So if my starting point is, I don't have everything I need, then it's a very different day than if my starting point is, God's figured it out. He'll make sure I have everything I need. He's already said that. He doesn't lie. And now I need to walk with him.
Yes.
Be still. Let him work on my soul. Let him strengthen me before I go into the fight. And then the day is quite different. So that for me has been the big focusing on the first half of that and really seeing what it means and why it's set up as the first half of that as opposed to the latter half of that.
Transformed by the renewing of our minds.
Yeah.
Richard Okello, Sango Capital, thank you. What a joy to have you with us.
Thank you.
Friends, we're at the Lions Den here in Dallas, Texas, celebrating the 10-year anniversary of an amazing gathering of faith-driven investors. Tomorrow there's going to be a pitch competition where a number of faith-driven entrepreneurs pitch this community of faith-driven investors. They're focused on Africa specifically this year. We've got one of the most best-in-class institutional-grade fund managers of Sango Capital, Richard Okello, here with us. What a joy to hear some of your story. Thanks for listening, friends, and we will catch you next time.
So glad to be here. Thank you. This was great.
Come for content, stay for community. Join a faith-driven investing group online or in person. Visit faithdriveninvestor.org. That's faithdriveninvestor.org.